But this candle right here would be an example of a bullish engulfing, right? And it's that yellow one on the right. So what do I mean by bullish engulfing? So we have the, guys know, I'm assuming you know what candles are. We have the body of the candle, and then the shadows, or the wicks. And a bullish engulfing is a bullish candle, whether it be green on your chart or yellow on mine, but basically the high and the close take out the open of the previous bearish candle. So that would be an example, or right here, that's a bullish engulfing, taking out this one. Hope you guys know what I'm talking about here, where that's the open of the previous candle, and this candle obviously takes it out by closing above it. Now it also, this is closing above it with the actual candle. Sometimes you can get just the wick above it, and that's not quite as bullish, but let's see if I can find a good example here. Oh, here we go. Today's daily candle. This probably was bullish engulfing at some point. We had that short squeeze yesterday. This was a big, oh my gosh, that's terrible. This was a big, big yellow, green candle, whatever you got on your chart. Now, this is slightly different than just the regular bullish engulfing in that this candle was 2 candles after the bearish candle, right? So, but I'll cover that in a second. I'm trying to go in order here. So this was bullish engulfing, where you have a positive candle take out the high of the previous one. And then bearish engulfing is the flip side of that, where you have an up candle and you have a negative one take out the low of that, which this candle does here. So that would be a bearish engulfing. And if you're trying to make entries on that, if you're trying to short a bearish engulfing, you can either short it, anticipatory once it's already started, like the moment it breaks this level, you can short, or you can wait until the candle closes in case, something like this happens, like it's a big bullish engulfing, and then within the same time frame, it comes down and makes a big wick. So all the breakout traders that were going long up here, well, they're trapped now. And this did not turn into a bullish engulfing of any kind. Guys following that? So bullish engulfing, bearish engulfing. This one also, bearish engulfing, takes out the low of the previous one. Boom, bearish engulfing, takes out the low of the previous one. And so if you're entering, again, we don't enter just based off price action, but if you're entering off this price action, stop would be above the candle you enter on. Or likewise, the stop would be below the candle you enter on. Guys follow what I'm talking about there? So if you had shorted based off this, you would have been stopped out by this big bullish engulfing. Okay? And that's actually a delayed bullish engulfing. But like I said, we'll get to that. And by we'll get to that, I mean we'll get to that right now. So in addition to delay or bullish engulfing and bearish engulfing, you have delayed bullish and delayed bearish engulfing. Good example is right here. This is not the candle, of course. This is the bearish candle, right? Oh my goodness. I'll just use the ellipses tool. So that's your bearish candle, which gets taken out right there by this big candle. So we don't have the case where this candle that immediately follows it closes above and takes it out. But we do have a series of candles right here, 1, 2, 3, that take this out. And so on a higher time frame, these 3 really would just be like a massive wall, right? I'm not sure if you're following that. But that as a whole is called a delayed bullish engulfing, over this one. You guys following that? And then you could be, depending on how big the difference is, you know, if we have like 1, 2, 3, maybe 4, oops. I'm sorry, guys. Drawing on a laptop is really hard. 4, 5. You know, imagine you had 5 really big candles to make a big delayed engulfing. If you're entering here, you probably do not want your stop loss to be, you know, down below this very first candle, 15, 20% drop. So whichever is the biggest candle, that's probably where I'd have my stop. And if it was tight enough that I could have, you know, if it was just these 3 candles, that's an 8% loss. So if my risk reward is good enough that I'm willing to take an 8% loss if I'm wrong, that's where my stop would be. Guys following that? So bullish engulfing takes out the previous candle. Bearish engulfing takes out the previous candle opposite direction. And then delayed bullish engulfing, where it's not the candle right after, but here, I'll draw the lines again. Top of that bearish candle, top of that bearish candle. So these 3 were actually bullish engulfing or delayed bullish engulfing at this point. So at that point, if you were entering anticipatory again before the candle closes, you'd have nice tight risk, 2% or 4% if you were using this candle as the low. Now, if you waited for the close on your delayed bearish or delayed bullish engulfing, then you know, obviously your risk is a lot greater. So either you can wait for a retrace, or if you have if this candle was maybe like this one, like double in size, if you're entering based on that candle, Jason likes to, I'll do a fib retracement here. This is showing just levels within this candle that I've highlighted. So Jason likes to put his stop around 55% of the way down. Since markets tend to hold halfway, if you get a retrace here and it doesn't hold, then you get stopped out. So that gives you a 50% retrace plus a little bit of wiggle room for your stop loss. Then if you're entering up here, you're able to risk that like 3-4% without having to risk 10% on just one candle. You guys following that? Got to be a little bit versatile with your stops. And that goes for all these setups, really. All right, but let me just stream through that again. Bullish engulfing. Enter after it closes above. Stop below the candle. Bearish engulfing. Can enter after it closes below. Stop above entry. Delayed bullish engulfing, where multiple candles take out the previous bearish candle, stop below entry. And then, did I go over delayed bearish engulfing? It's not rocket science. It's the same thing. There's your bullish candle. And then it takes several big candles to take it out. And this is your main bearish candle there, but these 3 together are bearish engulfing. And so if you're entering like a short based on breaking that, then your stop either is going to be above that candle or above the set of 3 if your personal risk allows for it. That makes sense? You guys following? It'd really suck if I wasn't recording right now. But I am. All right. All right, so next we'll go into topping tails and topping tail takeouts. So often when a move gets extended, you start to see these topping tails, which is where the shadows or the wicks of candles are very large at the close, meaning that at some point in this, or on the daily chart, so at some point in this day, and this day, and this day, oh, sorry, I'm getting a phone call. Price attempted to move up to the 6,800 level, and then every day was rejected by the end of the day. And as we can see, after 1, 2, 3, 4 days of this in a row, it eventually led to Boom, bearish engulfing candle right there, takes out the bottom. And then a huge, this is called a real money candle, but in the opposite direction that we normally look for it. And we'll hit on that later too. Yeah, these are your topping tails. And then the flip side of this is this bottom wick, which is a bottoming tail. And you can see there was a bottoming tail off the 8 here, indicating that maybe price would hold the 8 and continue higher. But it seems the exhaustion in the markets was enough to take it further down there. Whereas here, you have some bottoming tails, and those were seller exhaustion, selling into buy orders. And they got smaller and smaller as the move started getting stronger and stronger until it eventually broke out. So then you guys get that this is a topping tail. All right, this is a bottoming tail. These are bottoming tails. That's a huge topping tail showing price got all the way up here in this day and then came all the way back down. And it's only 1 o'clock. We got 7 hours until this can go all the way back up or even further down. All right, follow me there. So that brings us to trading these topping and bottoming tails. We have what's called a topping tail takeout. And for that, I will use raise just to be more accurate. Let's put up the highest point of our topping tail that we see right here. And we'll go the lowest points. Zut. Zut. All right. So, if you were looking at this, sorry. Whoa. If you were looking for a bullish setup in here, you have either bullish engulfings that you can enter on, bullish engulfings. And remember, if we enter on these candles, stops are below the entry, or if you enter really high, you can put them halfway down, a little under halfway down the candle. So that's one way to enter if you're entering based off the engulfing candle. And then we have takeout candles where you take out previous topping tails, which happens right here, where we have this area where price has previously come extended into and not been able to get any follow through until here, where we finally get nice explosive movements and follow through. So you could enter above that, above these topping tails. It's called a topping tail breakout trade, and then have your stop below that candle entry. All right, that makes sense. Same thing goes for the short side. If we're to, let me see if I can find a better example of this. We don't have to stay in this little space here. Here's a good one. If we have a major bottoming tail, which I would consider this one, all these to be major, given that price moved strongly away from it after holding it. We have a major bottoming tail, and we take that out, meaning at that point, that's a candle closed below it. You can enter a short there with a stop right above your entry, right above this candle. Now, that would have gotten you stopped out right on the next move, bullish engulfing. But this range is the same. If we can get another bearish engulfing below that, except now you have another major bottoming tail, right? The one right to the left of my cursor here on that candle that took out this bottoming tail, that's another bottoming tail. And so if you get stopped out here and you're trying to play bottoming tails, maybe you're waiting to take out this to re-enter, which happens right here, right? And this is one of those examples where if you didn't want to have your stop all the way above the candle you entered on, a little over halfway, right around here, that'd be where maybe my stop was. And this time, the first move up would not be stopping you out, unlike here, where if you shorted the break of this bottoming tail, immediately after, a bullish engulfing would take out your stop loss. Which happens, it just means shorting was not necessarily the right play right there. And price action is telling you that. Until we get those topping tails and rejection at this BCI here. And I'll explain that more in a minute when we get to BCIs. Yeah, so that's bottoming tail takeout. You can enter after taking out a bottoming tail, or topping tail takeout, enter after topping tail. And this was an example earlier where if you did enter after breaking out from topping tails, that you don't immediately just get stopped right out until over here. And you had all this time to take profits. So same thing would go for if this closed today, like that. And we had some price action. Oh my gosh, I can't draw. Had some consolidation action. When we finally get above that wick, that would be a considerable breakout. And I would then enter, if this was the candle that took it out, I would then enter on that candle up here with my stop below or about 55% of the way down if the candle is really big. Again, shoot me messages if you aren't following. I'm happy to make a clarification video on any of this. So, next in line will be the bullish and bearish candles ignored. So, what does he mean by that? Let's start with the uptrend from last year on this one. Alrighty, bang. Looks good. All right, so let me let you guys get a little view of the chart here. You guys point anything out that you see? Right? Some big bottoming tails down here, holding the 8-period moving average, holding the 30-period moving average. Big topping tail there. Keep in mind, I'm using a log chart too, so these moves down are actually, these are pretty significant. Taking profits on the topping tail, rebuying a bottoming tail can really be profitable. Bottoming tails. Bullish engulfing on that candle. Bullish engulfing on that candle. Bullish engulfing on that candle. Bullish engulfing. Bullish engulfing. Bullish engulfing. Big bullish engulfing, right? Take out the top. Stop below. Right. On the flip side, big bearish engulfing on this candle. Takes out the low. Delayed, these two. Delayed bearish engulfing on the last bullish candle. Takes out the low. Of course, followed by a bullish engulfing. And now we've got, that'll lead all the way up to the candle I want to talk about now, which right here is a big bearish engulfing, right? We had this nice run up, took out that topping tail, nice run up until it's this big massive bearish engulfing, where we are now down 20 to 30% from the highs in one daily candle, one weekly candle. So this is really bearish just looking at this candle, but we can always watch for the next candles afterwards for follow through. And what do we get from the next candle of this bearish engulfing? Boom, we get a bullish engulfing candle. So now, this bearish candle, which attempted to reverse the bullish trend, or rather attempted to show that the market was reversing the trend with huge sell volume too, this is now taken out. And that not only did we close, here I'll move forward, get off the side here, but not only did we close above the open of that candle, but we closed above the topping tail of that candle as well. So now this is a good candle to enter on if you're following, the same rules I do at least. That's a bullish engulfing that takes out a previous bearish candle. Right? Not just taking out any candle, a big bearish engulfing. So now this bearish engulfing becomes a bearish candle ignored. All right? So that is a bearish candle ignored right there. So we have bull trend, bear candle, bull candle takes it out. This is a bearish candle ignored, and that is bullish. And so now, if I'm entering based on this, my stop below that candle, really below the one you enter on. Right, and the flip side of this is that was a bearish candle ignored, and the flip side is a bullish candle ignored, which we get. There's several of them here, but I'll just pick this one, right? So we have this big bearish candle off the top. We have a little doji here, and then we have a bullish engulfing take out the open of that previous bearish candle. Unlike the last one we looked at, it did not take out the topping tail. So not quite as bullish, but still a bullish engulfing until the close right after. That closes right below it and turns a bullish engulfing a bullish engulfing reversal candle into now a bullish candle ignored. And then this candle also gets follow through the next week. That makes this a BCI. That's what we'll often refer to it as: bullish candle ignored, bearish candle ignored, BCI. Another one on this chart here, a really good example actually, because bullish candle ignored and bearish candles ignored often tend to be the exact middle of the move. So you can see here we have this really nice 5-week trend up, and we had a little doji star here, which is often a reversal candle, and then a bearish engulfing. So the low gets taken out, the bottoming tail gets taken out, short here, stop above. Boom, boom, boom. Booking short profits. Reversal candle. First green, or again on my chart, they're not green and red, they're yellow and gray, but first positive candle we see after 3 weeks of a downtrend. And immediately the next week is taken out. And now this is not a bullish candle, it's a BCI. So if you're entering on that, or maybe you're still short, you add some more shorts, stop on that entry is right above. Okay. And then you bottom out and you get a new trend. And what do you know? You have 2 weeks up, a BCI, 2 weeks up, right at halfway. Okay. And so the long entry for that would be right above that, where that becomes a BCI, and your stop is below your entry. All right. Guys, following that. So bullish engulfing, bearish engulfing, topping tails, bottoming tails, a bearish candle ignored, a bullish candle ignored. All right. Let me see what I'm missing here. No, is that it? All right. So now we'll just go to what I consider the most important candle setups out there, and these are both coined by Jason Jenkins. So guys, please do check them out. It's worth your time. All right. So the first one is known as a real money candle, and this is just what Jason Jenkins has kind of coined this term, in that it's the biggest candle on your chart, really. And it's a sign that big money has entered or exited the market. So I'll give you guys a second here. Do you think you could pick on here any candles that are real money candles that are significantly larger than any other candles in that area? All right, so I'm leaning towards this one because this is a massive candle in one day. It was about a 18% price jump. I mean, you cannot find this anywhere else on the chart. Maybe if we went back a little bit, we could. All right, I mean, that was pretty bearish. That was a 33%, 35% drop in one day. But it got a big bottoming tail, right? It wasn't just like it wasn't mostly candle, which is what we want to see. So real money candle is somewhat similar to a bullish engulfing, but ideally, we can there could be dozens of bullish engulfings throughout here, but there's only one, maybe two real money candles on this chart, and that was big money entering the market. And so my entry on that is I might enter a position right off the top of it, right after it closes. Right? And then the pullbacks after that real money candle, I want in on. And if we go and look on smaller time frames there, this was back in April of this year. Sorry, guys, my laptop is really slow. All right, that green circle is where I circled the top of the real money candle. And you can see, even on the hourly chart, it just shows how significant this candle was. I mean, that was on the daily chart, there might have been contests, but on the hourly, I mean, there's no other contest. This is probably the biggest candle that I could find on this chart, no matter how far I zoomed. Yeah, that's not true. Maybe before like 2016, but that's a huge candle. So I'm okay entering right after that, even at the stop area. It does not mean I want to buy all my size or anything there, but I want to buy some there, and then I want to start buying pullbacks. And we did not really get very many chances to buy dips here. I won't go into indicators right now, but your only real chances to buy dips were once some bottoming tails started forming, buying into there. But if you didn't buy the breakout of this real money candle, you might not have even gotten in the trend at all. Unless you're playing, again, if you were playing these smaller time frames, that was a different thing. Because we've got some other, this was a real money candle, but if we move it off the screen, we have more real money candles too. Specifically here. I'd even argue there. So all good strong entries. It does not mean, I want to make it clear here, it doesn't mean I can just buy all my size, go 10 times long or something right here. Right? That's not what it's saying. But this has put in a big wide range on the chart that is now quite pivotal, or at least potentially pivotal, because a lot of big real money entered the market at this area. So any pullbacks of this, I want to be a buyer of. Whether that's halfway or 75% of the way down, either way, I want to be a buyer until it gets taken out on the flip side, until this real money candle up gets taken out on the way down. So once that 6,700 level breaks, then it's like maybe reconsider. Maybe this real money candle is not as pivotal right now as we thought. Are you guys following along? Again, I'm asking you these questions even though you're not going to be watching this video for a day. But just please give me feedback, guys. I really do appreciate it. Aha, over here too. More examples of real money candles. Right there. Right there. I'd say, on lower time frames, all these are probably real money candles. But on the chart right now, this is definitely the most significant. So if you entered based off this, you're happy to buy pullbacks after. And then you're taking profits immediately into the top of that range and into new highs. Right? You kind of follow in there, real money candles. I might make a whole nother video sometime just on the real money candle, and the next part I'm going to talk about the swing line setup, just because they are the most important setups, in my opinion. All right. So that leads us to, like I said, the most important setup, the one you will see probably more than anything, is the swing line setup. Now, I'm not positive if Jason coined that term himself or not, but essentially, I'll go to the weekly. It's a little easier to see. Essentially, if we were to take little brush here and try to connect all the opens of these bearish candles. Okay, maybe the weekly wasn't a great idea. But let me try and explain this a little differently. If this is our big pivot right there, and we just start marking all our big pivots as we go down, until one of those gets taken out, we don't have a swing line setup. And I guess you could argue this candle is a swing line setup on this one. Let me try and give you guys a real drawing of what I'm talking about here. So if these are your down moves, you have candles just forming like a staircase down, kind of like what we saw from 20K to 6K. Until you get a big candle, and it really doesn't even have to be that big, but until, right, if these are your lower highs like these, lower highs, lower highs, lower highs, lower highs, lower highs, until you get a candle that takes out the previous lower high, not worth an entry. And then this entry is called a swing line setup. So, a good example might be right here, where you have your lower high, lower high, lower high, and then boom, you get a candle that takes out the previous lower high, which is what we call the swing line. I take it back. I will show it on the daily chart because it's probably going to be easier. Yep, much easier. So if we have our downtrend here, and I just connect all the tops of these candles to each other, right? I don't get a, quote, swing line until, boom, like right here, where I finally have some candles taking out the previous highs of other candles. And I would argue that this candle here is the one that really takes out, right? That's the big lower high we're working with right now. But on a shorter time frame, that was a big one too, with these two closes. So now this candle has essentially given us a, quote, swing line setup, right? Where your lower highs have turned into not lower highs anymore. And we can see that on pretty much all the way down. But what you guys care about, how do you work that into a trade? Well, if you have your lower highs all the way down until a point, boom, right there, you get a bullish engulfing over the previous candle, and it takes out the high of that last daily candle. This is your swing line setup. Your stop goes below, you can enter based off of it. The next day's pullback is definitely viable right there. And then you're taking gains until you get stopped out. Right? Not every swing line setup is going to lead to a full uptrend or anything like that. Okay? And it goes in the other direction too, right? The lows of my bullish candles, boom, taken out. The start of a swing line setup. And maybe if I was to zoom in here, that would help. Right? If you just want to follow me here, this is the bottom of the main bullish candle. And as we go up following the bottoms, boom, this is the candle that takes it out. This is a swing line setup in the opposite direction, a bearish swing line setup. And then my stop is going to be above that, and I can add shorts going into it as well. And I know my risk there. My risk is between the top of the swing line setup, and really, that's it. Wherever the stop loss is above the swing line setup and my average entry. So if I had you know, $1,000 I'm looking to shorten here. Maybe I start 250 of that on this candle. Maybe I had to buy it like right there. And then I'm shorting into these candles with the same stop loss above this one. So now maybe I've got like 75% of my size, $750 in. My average is now there. And maybe I'm going to add one more piece into here and I don't get it or something. And it moves away from me. Well, in between the swing line setup and, you know, say current prices here, I've got another swing line setup where I've got the highs of these candles and boom. Or sorry, the lows of these candles since they're bullish. And boom, gets taken out. In the same way it happens on the way down, this candle takes out the downtrend. This candle takes out the uptrend. And then this candle takes out the attempt to invalidate this swing line setup, right? And then you get absolutely large follow through, bottoming tail break takeouts, bottoming tail takeouts, right? BCI right there. Bullish engulfing, also a swing line setup here. There's your lower highs of your candle, your lower highs, and boom, taken out. Now we do have a BCI takeout here though. So maybe you were even short with a stop above that. And then you get this bullish engulfing swing line setup and you're like, ooh, maybe I want to take some of my shorts off the next chance I get because this is a sign of a potential reversal. Bullish engulfing swing line setup. So if you were short here because of this bullish candle ignored being taken out, I would be taking some profits, not only into new lows, but once I saw this bullish engulfing, that's a sign that I might not want to be short anymore. And so now I'm looking for longs, but we get a bearish engulfing candle and a reverse swing line setup. And so we're back in the other direction. Stop above here, shorting. Bada bing, bada boom. Am I making sense, guys and gals? If not, shoot me questions. I will gladly make a whole other video on this if people are interested. All right, well, I hope you guys enjoyed that. That was my first real, what I would consider a legitimate quote lesson. So I know it's a little rusty, but hopefully as these lessons come out more and more, I'll get better at teaching them and you guys will be able to follow along well. Maybe I'll be able to do them live one day. We'll see. Let's see, so that bottoming tail now is what every bear is waiting to get taken out. And we've never had more than one day where we spent time below it. Perfect example of a bottoming tail takeout if you break that. Same thing goes for this one over here. Got a lot of people that are going to get bearish below that, below this, just like they did below this. Right. All right, I don't know where I'm going with that anymore. Thanks for watching, guys.